It's going out there. It's February 17th. And I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. You know, so many of you are set up to fail, and you don't even know it. And it's not your fault. It's the way you're programmed. It's the people you listen to or in front of every day. Maybe your favorite newspaper that you read, whether it's a Wall Street Journal or whatever it is when you wake up. Maybe it's a financial media outlet you watch in the morning. It's even the website you like to view daily, whether it's Facebook, Twitter, any other social media platform. They're probably more than 75% of the world's population who are over 16 years old are on, right, some kind of social media platform. But why am I saying that? Set up to fail. So I want to dig a little deeper. Because when we look at why does 5% of people become wealthy, while most of the 95% end up struggling? I'm talking about the 1%, the billionaires and stuff like that. But if you look at the stats, at least 70% of Americans live paycheck to paycheck, right? That's according to Career Builder. And 70% of Americans have very little savings along with huge piles of debt. 70%. Massive divide. And you could Google this and read books about it, how to succeed, how to be part of that 1%, and you're going to see tips online. Work harder than everyone else. Don't sleep as much. Don't waste your time. Or be extremely productive. Be very competitive. Try to be the best at everything. But I'm going to be real with you. All that's horseshit. It really is. Because if you truly want to be successful, if you want to be a great investor, make enough money so your kids and their kids do not have to work again. You have to learn to reprogram. You have to learn to think differently. Or simply put, don't be part of the status quo. That sounds pretty easy just when you say it. But most people, that's really, really difficult. I'm going to bring up some examples here that are going to piss you off, but it's going to prove my point. Because most people think the same way. Let's start with Al Gore. He launched The Inconvenient Truth in 2006, 6 years after losing the election. It was about the effects of global warming, how the world was going to end if we don't do something immediately. And everyone bought into the argument. He said, if nothing is done to curb the emissions of carbon dioxide, I'm quoting him here, and other greenhouse gases, temperatures will rise, ice caps will melt, ocean levels will rise, and weather patterns across the globe will be disrupted. So the ice melting from the polar regions would flood the North Atlantic with fresh water. Again, this is 2006, interrupting the warm water flow from the tropics toward Western Europe. So sea levels will rise in 10 years. Pretty far off of that now, right? Penetrating low-lying channels, which will flood the southern part of the United States. I haven't seen, just tons and tons of floods. A hurricane here or there. But in his presentation, he included images of melting glaciers, dying polar bears. Oh my God, dying polar bears, right? Showing when a dying polar bear, their heart melts, right? Automatically, great job. Coastal cities inundated by massive floods, showing pictures of this. Cities wiped out by hurricanes and tornadoes, and food supplies exterminated by droughts. Of course, none of this happened, right? None of this happened. And the main reason, because back then the message was global warming, now it's climate change, right? Change from global warming to climate change, right? I mean, imagine people in Texas right now freezing their balls off while having no electricity, and you're talking about climate change, right? We'll get to that in a minute, but tell them that, they should be concerned about global warming. No. But that's why 25% of your electricity needs in Texas come from alternative sources like solar panels, wind turbines, which are frozen right now, right? Everybody knows the story. It's all over the place. But it's climate change, right? It can't be global warming because it's freezing. It's climate change that caused this. Whether the weather is very cold or super hot, if you have forest fires, all this is caused by climate change. Everything, right? What people fail to realize was what Al Gore's real agenda was. Why he made An Inconvenient Truth. And if you really look at that, it was because he wanted to make an absolute fortune. Through carbon credits, position himself perfectly to be a huge beneficiary of the massive, massive environmental movement. The Paris Accord, everything, all this stuff. And if you look at how did he make it massive? What did he do? This is how smart this guy is. I'm not putting him down at all. I'm just saying. By ensuring all high-ranking government officials who had any involvement with funding policies related to climate change at all were in line with his vision. And if you look at the agencies, it's Department of Energy, Environmental Protection Agency, National Science Foundation, Department of Education, National Oceanic and Atmospheric Administration, and the National Aeronautics and Space Administration. He got governments. He got celebrities to endorse this vision, all underneath while he invested accordingly. And I'm not knocking Al Gore here. He's brilliant in what he did. He created a story that's easy to tell, people can identify with, billions follow, while positioning himself perfectly to make an absolute fortune. His net worth went from $2 million before losing the election, $2 million, right? He's supposed to be like a farm guy, to over $250 million 10 years later. And he's one of the biggest players in SPACs, by far. If you look at every person who's wealthy, right, and they keep creating these things, Al Gore, he's right there. It's unbelievable. I'd guess his wealth is easily more than $400 million now. Now, this isn't to say you shouldn't believe in climate change. I think most of us do, in some regards, and we need to do things about it. But the crazy stories to scare the shit out of you, to think like you're going to die 10 years, the world's going to end, to the point where Texas had a mandate, their politicians have 25% of their electricity come from solar and wind. This is Texas. This is Texas, the energy capital of the world, where they have more natural resources than 95% of countries around the world, where they burn natural gas for free because they have so much of it. It's almost like an unlimited supply. They can dig deeper and deeper and deeper. If natural gas prices go higher, then they can afford to drill deeper. It's almost an unlimited supply. I was at a conference 12 years ago with Apache, the CEO, speaking, saying we have enough natural gas to last 300 years, which is not in his best interest to say. When lost natural gas, I just thought it was funny because he kind of said it under his breath. Burn it for free. By the way, natural gas, super clean, super cheap energy. Now what do we have? Dozens of people who died from not having electricity in record freezing weather. All because a lot of our politicians are saying that the world is ending. This isn't political, guys. I'm getting to a point here for all those investors out there. And these politicians, when you think about it, know nothing about this technology at all. They don't know the stats. They don't know anything, right? They get paid by organizations to promote an agenda. They're on the take. If the agenda changes, or if they look at their polls and people no longer care about climate change, they're not going to talk about it anymore. The politicians, they don't care. None of the politicians on both sides care. They just care about power making money. You should know that by now. If they cared, they would have passed a stimulus bill immediately. Right? Look at the House, how quick they impeached Trump, like 2 seconds, no evidence, no nothing, whatever. You can bring that up. How can't you pass a stimulus bill when you force people to close, even though when you're looking at cases, did you see the U.S. cases? They're down 80% since October, the cases. If you're looking at hospitalization rates, down 50% month over month. Why the hell is any school closed? Why the hell is everything not open right now? I have no freaking idea. That's okay. That's okay. But in the meantime, you're conditioned to believe that the world is ending because of climate change. It's what you read, it's what you listen to. Guys, you have to learn. You have to learn to challenge everything. Challenge everything that I'm saying right now. Everything you read. It's easy to follow along with everybody else. Follow along with the message. But you know what's not easy? Questioning it to the point where the people who support that agenda will shut you down if you have a different opinion than them, right? You can't even debate, which is crazy. And same thing happened with fracking. HBO published Gasland. Everybody saw it. Huge, right? Unbelievable story. Great story. Great story. Showing people, turned on the faucets in Pennsylvania, and they basically put a lighter to it and, lit it on fire. And this is all from fracking. Great story. Awesome. Everybody bought into it. Fracking's terrible. Even I bought into it. Until I went to Texas myself, North Dakota, the Permian Basin, the Eagle Ford, Williston Basin, to investigate myself, traveling through dozens of counties, weeks and weeks at a time, to learn about this technology. You know what? When I went there, I thought I was going to see dead animals everywhere. I really did. I was like, holy shit, this fracking thing is crazy, because of what I was reading and what I was seeing. When I learned this technology, it was easy to see all the bullshit that was being reported and the agenda. How fracking causes water contamination. Just forget about if you think that or not. I mean, you're looking at fracking. It's impossible. I mean, drilling thousands of feet below the surface, right? That used to be a vertical well. Now they do it horizontally, and then they frack. But they're doing it thousands and thousands. I mean, fresh water is what? Maybe 500 feet, right? You're not going through that water, but even if you're going, unless those chemicals that they use, which used to be bad at the beginning, and they changed them, more environmentally friendly now, unless those chemicals magically, right, change everything that we've ever learned, right? Magically travel upward thousands of feet through rock to contaminate. That's the only way, unless, some idiot, they have, tailings ponds, things like that. Just takes a lot of that water, which is recycled and used again for fracking because you need a lot of water pressure. But unless they take it in a truck and dump it in a river, that's different. But otherwise, fracking doesn't cause contamination. Why? Why was everybody saying this? It's crazy when you think about it. Or fracking causes earthquakes. And those earthquakes are dangerous for you. And you saw tremors or whatever. There's a couple of report cases. But, I mean, how many people do you know died of an earthquake caused by fracking? I don't know. Let me know if you know anyone. I mean, tens of thousands of wells have been drilled over the past 10 years at least. Everyone's okay, right? We're doing okay. I mean, not to mention that with hydraulic fracturing, right, and horizontal drilling, the success rate of finding oil is close to 100% in places like the Eagle Ford, the Permian. Because many of these areas have been drilled on for decades, so they know where it is. However, it used to be vertical wells, and vertical wells are just straight down. And it was difficult to get, to different areas. You have to drill straight down. Now you drill straight down. It could be 3,000, 10,000, 12, 15,000 feet. And then horizontally, right directly into the pay zone, which they see. Then they fracture it, right? They blow it up. And that's how they draw the natural resources in there. But you could drill vertically, horizontally, and right into that, what they call is the pay zone. So you're looking at Texas close to an unlimited supply of energy. Yet mandating that 25% of energy come from alternative sources. I mean, that would be like Google or Facebook saying, hey, if you have a problem with our services, just write a handwritten letter and mail it to us through the post office, and we'll give you a response inside of 2 weeks. That's what it's like saying. It's insane. The Kazakhstan saying, what it is, Kazakhstan is responsible for 45% of nuclear energy, saying, you know what, we're going to bring that down to 20% and just for the hell of it. To save the environment or whatever. But it's crazy when you think about it. So my point to you, what you're allowed to do as an individual investor, right? If you're a business right now, you have to come out with ESG and I'm supporting the Black Lives Movement and all the, you have to, right? It's the writing on the wall. You're a big business. You have to do. Individual investors could speak for themselves. That's where you have an advantage over Wall Street. You get to question everything. And you know what? When you do that and challenge things, it's going to lead you to being on an island by yourself, which has happened many times. Security tokens. People laughed at me. Our whole company's based on that. People laughed at me about fracking when I came back. People laughed at me about Northern Dynasty saying, this is all, bullshit, this project. And, taking 2 planes, a helicopter in the middle of nowhere in Glasgow helped my investors generate 9x, 10x returns in 7 months. Because I did the research and homework, and I questioned everything. Even going there, I was skeptical. I thought Northern Dynasty was a stock I was going to short at 40 cents. When I came back, I was like, this is complete bullshit. I mean, they're worried about environmental concerns 150 miles away because you have rivers running. They don't have rivers running through their land. There's no streams or nothing. There's nothing. I'm like, what are they talking about? Doesn't matter. Whatever you read, you're going to be conditioned to believe. And a lot of people become followers. And you don't even realize it. But that's where you want to be, on an island by yourself, investing in things when nobody likes them. That's when things are cheap. Dirt cheap, usually. They're out of favor. But challenge everything. Questioning the status quo. Again, that's not easy. You want proof? Here's proof. This is going to, forget it. When I talk politics, everybody goes crazy. Let's talk a little bit about politics really quick. Look at Donald Trump. And hear me out first. But why do you think every Democrat and person from the left, the media, the largest tech companies are labeling Trump as a domestic terrorist? As a domestic terrorist. You could say he's an arrogant, I won't say the P word, least humble guy around, never admits when he's wrong. You could disagree with many of his policies. But anti-American? Really? Did he need to become president? People say, well, he wants power. He already had power. He's a billionaire. He's a billionaire. He brought jobs back to the country. Lowest unemployment rate in history. None of that is mentioned. Biggest turnout for a Republican candidate in history. You know, 75 million people. And most of these people have jobs, own their businesses, and made more money having lower taxes from some of his policies. Again, there's tons of reasons to hate Donald Trump, but there's a few to really like him, which are never, ever allowed to be said. I bet you some people like cringing right now, listening to me say that. But the anti-American thing is very interesting. Anti-American. I mean, the guy loves America probably more than almost any president out there. He wouldn't have ran for president because, again, he already had power. He's a billionaire. But the anti-American message is interesting, right? Trump is a danger to your safety. And this rhetoric started when he campaigned on going after China. No coincidence. He went after China. Why would Trump go after China? He has operations in China. He's a billionaire. He could expand his operations. Even as president, not going after China benefits him when he comes out of office tremendously. He's going to be so much more wealthy. Why would he go after China for? But the funny thing is, everyone got on Trump. Why? Because every politician is on the take from China. It's that simple. You want proof? China has the biggest black market in the world. They steal everyone's technology, right? Resell it to whoever. The least environmentally country in the world by light years. And I visited China. Go to Beijing, go to Shenzhen one day. Good luck. When you could actually go to a car and wipe your hand and wipe the muck off of the car. That's how bad it is. And that's how much people are complaining. This isn't all of China. I'm talking about the way China is structured as a communist country. But it is a communist nation that won't even allow anyone to investigate COVID-19, where they closed down Wuhan. And when was this? In November, December? They closed down Wuhan. Nobody could travel anywhere in China from Wuhan. You can go international, though. That's okay. Which caused what? The spread of COVID everywhere, killing millions of people around the world. And don't worry, they're not going to get punished for that. No way. But China has totally different policies than America. It's totally different. It's exactly what we don't believe in. Communism, black markets, more government, less freedom. Doesn't give a shit about climate change or the environment. Right? Those are facts, right? And that I'm saying. Yet we import more from China than any other nation. Why is that? Why are our ports completely filled right now? Where everything is on back order. Chips, golf club, you name it. Wait till you see next quarter earnings come out and how many people say, well, we're going to push these earnings out further because, I mean, you can't even mail things at the post office and they're not going to get there in 3-4 weeks right now. That's how crazy it is. But those ports are filled right now. Many of these goods are being shipped out of China to here. And of course, we're not going to see this administration or anything, right? We need someone in there that benefits. The technology companies, all these companies benefit by being friends with China. They become richer. They become more powerful. But in the meantime, you're making China's going to be more powerful than the U.S. pretty soon. They're a communist nation. What do you think is going to happen? Crazy when you think about it. But we're going to see this administration, keep some tariffs on there and increase. By the way, tariffs, nothing. It's very, very tiny. And, but they're not going to pay for killing millions of people. No way. Absolutely not. So that's why we must label Trump as dangerous and an anti-American. We need to get him out of office immediately. Don't ever say anything good about him. Again, there's plenty to say that's bad about him. Plenty of reasons why you don't like him. You like some of the policies. I like the fact that he's not a politician, which is cool, because they're so used to this bullshit and people telling, hey, vote for me and everything is going to be great for 40 years. Look at the major cities. Look at them today. For 40 years, they're worse today than they've ever been. Promising all this stuff to you because you're followers and you believe in all this. You condition a certain way, but challenge the status quo. Again, not easy to do, but that's where you disrupt markets. That's where you find so many ideas. So many ideas that people dismiss. Oh, you're crazy. Wow, you're nuts. I've heard that so many times in my career. I made a lot of money off the fracking boom for me and my subscribers because I went there. I made money in Northern Dice because I went there, because people were telling me, even in the mining industry, it's a shitty project, it's the environmental code, whatever. And now they're still going through environmental concerns, which, don't even exist, which is sad, because no one's going to go out to Alaska and really see this thing. For the Pebble Beach project. But I took the time to travel weeks through dozens of counties in Texas, North Dakota, to find the real story, the one nobody was telling. When nobody believed in fracking, and they were going to end, and now, we made a lot of money on fracking stocks. These guys just, new technology, lower the cost of drilling, 100% success rate of drilling. I mean, profits surge. Look at those, the fracking stocks from 2010 through 2013-14. Forget it. With oil prices in the 90s, it took off. And traveling again through those counties, even North Dakota, in the middle of North Dakota, it's like dirt roads. We landed, and it's in an airport, which isn't even an airport. It's like you just land and you come out of the plane, and there's a couple cars there, and with a little kind of booth, you just say, okay, I want a car. Here you go, to give you a key, and everything's like dirt roads there. That's how you find the real story, the one nobody's telling. And when it comes to investing, we're seeing the same thing right now, right? We have young investors making a lot of money in the stock market, which is awesome. You love to see it. But I have to tell you, I've seen this movie several times. So in 1998, 99, everybody went all in. I remember talking, we would try to get accounts through Schwab, and Schwab wasn't managing money, and they pushed it out to independent money managers at the time, and just talk to this kid, oh, well, I can make 200%, 300%. You can't pitch something that's going to go up that you think could double in 3 to 4 years, especially even right now. Nobody wants to hear it when you see companies like Tilray going up, 7, 8x in a couple of weeks. And some of these companies, these SPACs, going up 4, 5x in weeks. It's crazy. Also saw in 2006, 2007. And then what happened? I mean, those markets, that was before amateur investors really got smoked, thinking they knew more than Wall Street. Today, it's GameStop. Same thing, just, couple different variables. It's SPACs, ESG companies that go up, 5x in a month. That, again, it makes it impossible for a guy like me to almost teach a young investor anything with the gains that they're making right now. And how can I explain that Virgin Galactic should have a $12 billion valuation when it generates $4 million in revenue? How could I explain that SpaceX, based on their latest funding round, is worth $74 billion? How could I explain that you should be buying Tesla based on valuation? You can't. The things we learned have changed, and it's tough right now. Right now. But it'll go back to normal. You know why? Because Wall Street always wins. It could take some time, but they do. I mean, last night I went out to dinner, took my family out to celebrate 3 different birthdays, my nephew, my daughter, and my mom, all a few days apart. And we went to a place, I have a hibachi grill, kind of like a Benihana, right? So, the guy's cooking in front of us. It was really, really great time, great time. But, he started talking. He said, hey, I own Bitcoin and I own GameStop. And he said, I'm never selling GameStop. That's what he said. I'm never selling GameStop. And it's kind of crazy when you think about it. I mean, why aren't you selling GameStop? Is it to prove a point or whatever? Because you're holding a company long-term, you're never selling it, where its business model is close to obsolete. And the stock should be trading at $4 a share based on the fundamentals. And slowly dying a slow death. Everybody downloads their movies through their PlayStations, their Xboxes, online. No need. That's why they close so many stores. Doesn't matter. Doesn't matter. No matter what I tell him, it wouldn't matter. He believes in the movement, in the whole Wall Street bets movement. He said, I'm holding on forever. Not a good idea. Take Tilray. People buying marijuana stocks, but take Tilray in general. Because if you look at Tilray and you look at chart Tilray, it was in December, they announced that they're merging with Afria, another marijuana company. And again, that was December. The stock was $8. 6 weeks later, it went to $65. $65. And you know how many people bought that at 45, 50, 55, 60, 65? A ton. A ton of people. But no one ever looked at the deal with Afria, which was trading based on whatever, 0.8 the shares, whatever it is. But Tilray had to come down based on the deal that is going to close. It's basically a done deal, that merger. It had to come down from 65. It had to come down tremendously. Nobody cared. Nobody cared at all. It was inevitable. I mean, Wall Street shorted the crap out of Tilray in the 50s and the 60s. They couldn't even get, I have a friend in the industry that couldn't even borrow. So much people short, they knew it was going to come down, and it did. It crashed at $30, $33, wherever it is today. But a lot of young investors who own Tilray had no idea about the math, or that Tilray was even merging with another company. They don't know. They don't know any of this. And for all of you that own GameStop, saying that you beat Wall Street, listen, we beat them. We beat them at their own game. Look what we did to Melvin Capital. Melvin Capital is a little tiny micro dot. Yeah, it's a $12 billion fund in an industry that's trillions of dollars. One idiot decided to over-leverage himself and got wrecked. You didn't beat Wall Street. You know how many hedge funds made an absolute killing shorting GameStop at $250 a share, $300 a share? It's $50 today. Nobody talks about that because it's not a story. Nobody cares. They want to hear about a bunch of young traders putting a $12 billion fund out of business, or to the point where it needed fresh capital, $2.5 billion. That's a fun story. And that's my point here. I've been where you are right now. I made money at an early age. I thought I was God. I was the smartest person on the planet. I know everything. IPOs, all this. I think SPACs were even popular in 1999, back then. And my story is similar to many of the experienced investors who have been doing this for decades, where they made money at an early age, got crushed, and then learned those lessons. Now, I'm asking you to try not to be that person, which is almost impossible. And most of you will fail. That's in your program. You're going to continue to buy options, which puts a time value on things, which is crazy. Where you could be writing a thesis and lose all of your money, lose everything. You're betting against computers that are trading, millions of trades a second right now. But you think you're smart because you made some money on some companies, which is good. You deserve it. You did great. But you're going to buy companies that you have no idea about when it comes to revenue, earnings, management teams, whatever. Just, hey, this company is in the electric vehicle space, and it's going higher. You need to be smarter than that. And it's not easy. Again, it's just you're controlled and you have your ego. I was there. I understand it. Because when you look at Wall Street, guys, and I'm going to tell you something about Wall Street because I'm trying to change that. I'm even trying to change the entire structure of Wall Street through security tokens, which I think will happen. It will eventually happen. You don't need Wall Street to be middlemen. Every business in technology has been disrupted through the internet, except for investment banking. Hey, Goldman Sachs, JP Morgan, those guys are great. They do lots of things. But when it comes to these deals, what do? Oh, here's your company. We'll invest in it a little bit, and then we're going to do a roadshow for you. We're going to introduce you to investors. They're just a middleman. Imagine if you go directly to the investors like I did. You bypass all the garbage. Instead of paying the 6%, 10% fees, whatever it is, and then give them 6% of the shares outstanding, all that. And I tell you, when it comes to Wall Street, they always win. They always win. They do. They won during a credit crisis. They used everyone's money to get filthy rich, and they got a slap on the hand. Even now, who's winning? Wall Street is winning from COVID. Big businesses. Oh, you know what? Walmart, Target, Home Depot, you're allowed to stay open. The local shops, nope, close. Mandated. You have to close no matter what. Think about that for a minute. How crazy is that? Want a good example of Wall Street? Look at SPACs. Look how many are coming out. Why are you seeing so many billionaires and wealthy people start them? Why do you think? Just ask, just challenge it. Challenge the status. Why is that happening? Because it's a no-risk way for them to generate tens of millions of dollars in weeks. They create these things, getting in under $1 a share. Put all these investors together. The holding company then trades on an exchange, right, at $10, where they're supposed to look for this fantastic company to buy. Retailers try to jump the gun, pushing this holding company. Again, no underlying business, but it'll go from 10 to 15 to 17. No underlying business, just anticipation that we know that they're going to pick a great, great company, which isn't really so great. It just happens to be in the perfect industry, the right industry. There's EVs, environment, cloud, AI, sports, that's why they fight. This is what we're looking for. And they broaden it out to every single growth industry because it's got to be exciting. It's got to be exciting. Then once they announce that merger, stock goes to 25, 30. Then what happens? Retail investors, you're high-fiving each other. You bought it, whatever, at 17, 18, and maybe cash out at 24, 25. That works now. That's why it's working for SPACs. But what do these guys do? They cash out and move on to the next SPAC. They don't care about, give a shit about the company or its long-term potential. No. You really think that's why they're starting SPACs? That's why it's going crazy? They can't believe that this is actually happening, these guys. And they're like, hey, if you're going to just put this on a platter for us, we're going to take it. And that's what they're doing. I mean, they're taking over a private company that 2 weeks before taking over was valued at $1 billion. And now they took it over just through a SPAC. It's valued at 10 times that amount. Again, practically overnight because it was bought by a SPAC. The market's going to blow up. The SPAC market will blow up. Not sure when, and it blew up in the past. The reason why SPACs used to be the biggest thing, and they went away. But now you look at these buildings going, holy cow, really? We could just structure these things, make a fortune off of them, no risk. You're going to take over a company, and probably it's going to be, how many SPACs do you know are trading below $20? Because usually they come out for some reason, which is not explained, at $10 at the holding company. And then they get to cash out right away. Sometimes within months, sometimes within weeks. But you need to be smart. And you know how many great investors made money early on and then lost it? And then when they look back and they said, wow, if I would have did something differently. That's where you are right now. Fast forward to me. I'm an old, ugly guy now. But fast forward to me. And say you're 20 and I'm pushing 50. 30 years. If you took that money and invested in the S&P 500, you would have earned 8% annually. Say if it's 20,000, 50,000, 100,000. You know what that turns into? Your life is set by the time you retire. But unfortunately, again, 90% of the people listen to this who are young, who made money, they're not going to do what I'm telling you to do. They're going to just follow those people, follow the blogs, follow the people on YouTube, follow everything, and it's good for now. It's great. Make as much money as you can. But again, we've seen this play out time and time again. And what sucks about it is when Wall Street eats you up, again, they always win. They're going to take everything from you and then make sure you can never succeed again, take your sneakers, your socks, everything, okay? It's greed. It's how cutthroat it is. I worked on Wall Street. I know how it is. And you have to learn to play that game. Because at the end of the day, you're sitting there on really a lot of money that you made, and I've seen this playbook before. And the reason why it sucks is because it's a bull market right now, but it's not going to be a bull market forever, where stocks with no revenue are going up 10x, 15x, and anyone can make. I know so many people who own stock, they don't even know what they do. They have no idea. Oh, I got this from a friend, and I know this, and I know that. That's cool. That's great. Definitely have exposure to that. A little exposure to that. But going all in and going on options, what happens is now the younger generation gets wiped out, and it's why so many young investors in the 1998, 99 period, 2006, 2007 period, there's a reason why that they got completely wrecked. And they never came back to the market, and that sucks. Because there is something different about this movement. There is something different where I'm talking about 13, 14-year-olds have come up to me and talked about Bitcoin and stocks, which is great. But it's not about making $1 million, because even if you make $1 million or $5 million in the market, if you make that in a year, you really think you're just going to stop? You really think you're not going to try to make that 10 million, 100 million and try to be the great? That's what your ego tells you as a young person. Doesn't say, hey, holy shit, I just made $1 million, man. If I put this away and just earn like 5-7% through stocks or whatever, that might be a high rate because everything's so high right now. Maybe you get lucky with low interest rates and we continue this stuff for a while. But since the 1950s, S&P 500 was created into 500 companies, it's over 8% returns annualized. Pull up a chart. Pull up a chart when you get a chance. It's the greatest secular growth trend ever since the 50s. It goes up and up and up with small periods of going down, but pull it up. It's amazing. Just see it low on the left all the way up to the right for 60, whatever years. But when you're playing this game with Wall Street, who's smart, they're cutthroat. You have to be careful. You have to find a way to check your ego at the door. You have to find a way to question everything, not be part of the status quo, which Most people are, and they're comfortable, and they're going to repeat everything that they see or they read. They're not going to do their own research or whatever. I think that's why we have a pretty big following, because you hear opinions that you don't really hear anyplace else because we do the homework and the research. And we get into a lot of these trends and a lot of this shit before everyone's talking about it, like Bitcoin. People telling you to buy Bitcoin at 45, 50,000. It's kind of crazy when we were saying to buy it at 4,000. Ethereum at 150, 170, and it's 1,600 or 1,800 even. You want to get into these things early and be smart. But you do that by doing the research, checking your ego at the door and being smart. It's not easy. It's not easy when you're conditioned a certain way. It's going on a diet. How hard is that? Where it shouldn't be a diet, you have to change the way you live forever, right? It's very difficult to change your habits. Smoking, drinking soda. How hard is it to get off of that? It's the same thing when it comes to investing. You're programmed a certain way. You're programmed to fail, and you have to get out of that. At least try to get out of that. And it's not easy, but that's how you disrupt markets. That's how you become part of that 5%. And again, very difficult to do. But for me, that's how I made most of my money in my career, by questioning things, by not following everyone into anything, being a contrarian, questioning everything. As a young investor, that's how you become wealthy when you're 30, when you're 40, when you're 50, when you're 60. That's how you have to think. And if you can think like that, it's great. Because right now it's tough to think like that when you're just seeing everything go up 5x, 7x, 10x, just simply because of an industry it's in, or if you have an Elon Musk, tweet about Dogecoin and all kinds of crazy shit like that. It's insane. But it's not going to last forever. I've seen this playbook before. It happens a lot, and it winds up Wall Street kicks your ass, and everybody else gets destroyed. Well, try to turn the tables for once. Try to be part of that crowd that does the right thing. You look long-term, and you're smart. You don't go on margin. You don't go crazy with options where you're risking your whole portfolio, and continue to own assets in a world where assets are going to continue to inflate for many, 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 many years, because the Fed needs to keep interest rates at zero. And as long as they're doing that and printing money absolutely like crazy, assets are going to continue to inflate, and you want to own them. You don't want to get wiped out. Now, speaking of young investors, I have an awesome interview for you today. It's with my buddy, my friend, Jason Raznick, who's the founder of Benzinga. So Benzinga is one of the fastest growing financial media companies. They cater to young investors, have all kind of live things, and you don't see me promote a lot of financial media companies, and there's a lot of advertisements, all crazy stuff. I mean, these guys are doing a really, really great job. They have a lot of free products and stuff like that. Again, I don't get paid a dime from them, but he's a good friend. I've worked with him at thestreet.com, along with James Altucher, Doug Cass back then. I mean, we had a really, really cool crew. And he decided to start Benzinga in 2010. Pretty amazing, because now it's one of the fastest growing financial media companies out there. And again, it caters to young investors. Jason and I are going to talk a lot about what I just mentioned, the mistakes we made as young investors. And hopefully many of you will learn from our mistakes. That's why we do this. It's not like we're geniuses, but we made mistakes in the past. And you learn from your mistakes and you get better, just like with everything. But we see this, which happens after every single Super Bowl market where a lot of people get killed. And, maybe you can learn from our mistakes that we talk about. And also, Jason counts David Portnoy, Kathy Wood, Mark Cuban, his friends, very, very big names that share ideas with him. And he's going to share a lot of those ideas with you, including several high growth names. I said, you have to be careful a lot of these things, but you want to be invested a little bit, where if you lose it, it's not going to get killed. But if you win, you can get 10x, 15x your money. I'm not telling you not to invest in a lot of this stuff. I'm just saying, don't go all in where it's absolute yes or no. I'm going to make money or I lose everything. Because some of the ideas that he's going to mention towards the end of this interview, these are ideas that I haven't even heard of. And I follow markets every single day for the past 25 years. And lots of names, and one of those names you'll see show up in Dollar Stock Club later on. But first, let's get to this great interview. And here's Jason right now. Jason, thanks so much for coming on Wall Street Unplugged.
Thank you for having me, Frank.
So we go back a very long time, 97, 98, or 2007, 2008. Pretty crazy times right ahead of the credit crisis. We work at the street, and you came up with this amazing idea for a new media site, right? Benzinga. I mean, did you ever dream it would become the platform it is today? And Yeah, talk about those times too when we were at the street, because we had an amazing talent there. Not me, but you were there. We had Al Tucci. There's so many great people there, and it's just amazing just to see where everyone's going now and how great and how successful they are.
Yeah, I remember James Altucher brought me on to Real Money, and I helped him like run some things, write content, etc. And it was exciting days for sure. And it was the days of like FinTwit, you, Doug Cass, Aaron Task. It was busy days those days. I came up with an idea: small cap content. There wasn't a small cap content, wasn't covered that much. And no one was using Twitter back then. No one. And so I was doing work for different companies. I said, Twitter can be a resource, a strong resource to come up with ideas. And so that's what I started doing. I started using Twitter, and I said, there's a better way to deliver small cap information. And so that's how the genesis of Benzinga started.
Wow, that's great stuff. Even better, I love the view in the background. It looks like they're playing music. You can jump in the pool. I mean, everyone in Texas is freezing right now.
Yeah, is the music annoying? It just turned on. So
I love it. I love it. It sounds perfect. It sounds perfect. I think people are going to be jealous, though, especially those people in Texas, and it's freezing.
So we've been stuck in Michigan, freezing cold weather, and 0 degrees snowing. I'm here in Florida with my family. It is rainy. It is overcast right now, but it is like 70 degrees. So I'm happy.
Nah, that's great stuff. And talk about, I mean, did you ever dream Benzinga will become the site that it is today, where it's, I believe it's one of the fastest growing financial media sites, and it is incredible, what you guys are doing over there.
Well, Frank, did you ever dream how big you've become? I mean, look at your setup. It's freaking amazing. Frank was doing podcasts before they were popular. He was doing it before. He was a game changer. Everyone from Disciplined Investor, Andrew Horowitz, the whole thing. So did I dream Benzinga would be, 100 team members today? No, I really didn't. What I looked at, to be honest, Frank, was solving a problem. I didn't think it was fair that small cap investors didn't get access to the same small cap information that people on Wall Street did. So I, at one point, had a big following in small cap stocks in the defense sector. And I said, well, why isn't that crowdsourced? Why isn't there more news outlets? So Benzinga started as a place where we looked at Twitter and we covered small cap stocks. Literally, our competitors weren't using Twitter as a resource. You know what they said? They said, F Twitter. Twitter doesn't have much stuff on it. It's all fake people posting. That's what they said, I promise you. And it's hard to go back then, but I remember like it was yesterday. I had screenshots of conversations and why I was asking why they weren't using Twitter. There are smart minds on there. And they said, there's no smart minds. Who's going to waste their time on Twitter? That is why I started Benzinga.
So we're looking at a different market today, right, Jason, where the Reddit crowd has really changed the game in terms of giving a voice to retail and young investors. I think you and I have seen this before, maybe in the late 1990s and the pre-credit crisis, only for these kids to really get their head handed to them because they realize, Wall Street is a tough place and it's very ruthless. I feel like it's different this time where these kids want to be around for a little bit longer now. How do you feel and what can we teach these kids about this? Well, it's just not about, hey, trading and making quick money, but staying in the market long term and maybe owning these assets long term. Because, I wish someone explained this to me when I was very, very young. My dad tried to pound it in my head and everything. And took me to my 20s to realize it, mid-20s. But, it seems like even younger investors, they're all on your platform. They're just investing right now, which is pretty cool.
Yeah, no, Frank, there's a lot of things you just said there that definitely, like your dad, trying to educate you and to learn what's really going on in the market. Frank, I blew up an account in 2000. My grandma gave me some money, and I got that account to triple, and then I got to see it go down to zero, including selling Amazon stock at $10. And I keep that as a thing in my wallet so I never forget, no matter how good the market is, which is really good right now, making a lot of money, the market's going up. Everyone's the smartest guy in the room. I have the stock certificate of me selling that Amazon share in my wallet. So I remember, listen, as good as it is now, there's going to be times when it's bad. I mean, what I was doing was buying stocks at 48. They'd go to 78. I'd buy more. This was back in 2000. And then they'd start falling, and I would hold them. And they would go down 50%. I would hold them. And so I had my hand handed to me in 2000. And the market, I don't want to say it, but it's like seems easy right now. And so when that happens, there's going to be a day, and I don't want to call it a day of reckoning, but there's going to be a day where the air is blown out a little bit. And And my hope, Frank, is that it doesn't go out too fast because I don't want to lose a generation of investors. I don't want to lose it. And like we see at Benzinga, we used to cover just long-term stuff, analyst ratings, all that. And now there's a lot more trading ideas. I publish my trade ideas. I have people that like literally text me, email me, asking for my trade ideas. It is a whole new frontier. I mean, such a new frontier. Yeah, Frank, go to this page. If you can you pull up another URL?
Yeah, sure.
Go to, you're on Benzinga.com, which is good. Hit / trade - ideas. Here, it's like some of my picks are on this page. So it's a new page that we haven't marketed, and I didn't tell you prior, so that's just my fault. / trade - ideas, not dash, not / ideas. So it's a dash between trade and ideas. You'll see it. It'll come up.
I like this. Getting this proprietary information from you. This is really cool. I haven't seen this yet either, so this is great, guys.
Yeah,
this is great.
So if you scroll down, you'll find Jason Raznick somewhere, or do a Command F, and you click on my name, and then it has like 70% of my ideas all there. Any trade I make, I write my idea. Why? Because people kept saying, well, where's your trade, Jason? Where do I find it? Well, I'm up there. I am. So click on my name. You know, it doesn't look like you can click on it, but you can.
Yep. Okay.
There you go. That's all my picks.
This is great. And so, this is so great.
Yeah. So no, it was so hard to find people's picks. I mean, there's so much noise everywhere. So I'm like, here are my picks, and I'm up over 65% this year, but I'm up over 500% over the last 3 years. And so I just thought, okay, here is stuff, and I get information sometimes that is before the market because I'm Benzinga. I don't trade those things. Because people would say, oh, well, he's Benzinga, he's access to stuff. I don't trade those things. I give it to the audience first, for sure. I never want to be like doing stuff ahead of people or have news. We are at the crux of it. We're like a Reuters for the millennial investor. Robinhood, Ameritrade, TradeStation, Extra Brokers, Lightspeed, Webull, Public, and 25 other brokerages use Benzinga as their pretty much main source of news and data. And so we are a full-service financial news and media service. We have over 100 people, and we have to provide, news and then give people actionable ideas off of it. The difference maker between us and most people is that if you believe – so let's say Apple has a new iPad. The iPad can dance or the iPad can go in the air. I have no idea. New iPad, we write the story. But what we try to do is we try to give hedge fund type ideas to the average investor. We don't say go buy the stock because, I mean, it's hard to come up with a stock every day. It's hard to come up with an idea every day. We say, if you believe this, Frank, then here are some bullish ways to play it. If you believe that, then here are some, bearish ways to play it. ETFs, options, So that's how Benzinga has differentiated itself versus just providing the straight news.
Now, that's what I like about it most is the accountability, because so many times I see people go on TV and they'll recommend something and you won't hear from them for 2 years. I love the fact that, even with our site, Curzio Research, everything's archived. You're going to learn from the mistakes you make, and I want people to see them because, obviously you and I have to be right more than we're wrong, or we need to get into another line of business. But, that's where you learn the most. And I love people like that where, here, this is exactly what I'm doing. Here it is. And it holds people accountable, right, to their picks, which is exactly what you want.
Yeah, Frank. It's a great point because you look at that page on me of like my picks. One of them was I bought Save, SAVE, which is Spirit Airlines. I bought it like 2 months ago. I'm up 18, 20%. But I bought options before earnings. But I didn't have a reason to. Because the earnings are not going to be amazing right now. It's the forecast that I'm hoping for. So I bought options, but I bought June options. Those options will be a winner, but in the short term, they were a loser because the earnings weren't strong. But that was obvious. My lesson there is I shouldn't have bought the Spirit options right before earnings because I didn't have the catalyst yet. The catalyst is in the future when people start traveling a lot more. So it's a good learning lesson for me. Don't try to be so early on the options. Wait a little bit, let them come to play because I had a chance to buy them 15% down. So I got to look at my history and see what I did wrong there.
Now, I'm looking through this, and you see Kathy Wood, you see Gene Munster, who's a great analyst. You see, and also David Portnoy, who came on your show, and I think that you're pretty good friends with. Some really good company and some good stock picks. I mean, talk about that. I mean, that network is incredibly powerful, and it seems like everyone those people I just mentioned are on board with, hey, you know what? There's a younger generation coming in. Let's try to educate them. I mean, that's got to make you feel great, right? Just the people that are coming to your site, and David Portnoy. I mean, how big is he? He's gotten, and he's pretty amazing.
Yeah, no, Kevin O'Leary, Dave Portnoy, the CEOs of Webull. I mean, all these guys, they want to change investing, and they when we started Benzinga, I thought it was unfair that people on Wall Street got information before people on Main Street, and these people are thinking the same thing. So Dave Portnoy, yeah, I mean, that day when the stocks were halted, we were going back and forth. He came on the show again, but he's a guy that, I went to Michigan with him, but I didn't know him in Michigan. He's changing the way people get information. It's not the same way of a one-way message. It's not the suits, as he calls it. Well, we met because he actually called me a suit many months ago. He called me a suit, and I was like, I'm the anti-suit. And so we met that way. He remembered, and we met like 4 months later. Yeah, because we had an earnings data on Activision. We had a small mistake, but then it was corrected. But we didn't affect the stock. And he didn't know who we were. He thought we were traders. Like, we're not. I'm definitely not first a trader. I'm first an information guy. And then I do some trade investing. I host like this show every day at 12:10 called the Benzinga Power Hour. And you can go to youtube.com/power hour, /Benzinga. And I host it at 12:10. And that's where I bring on guys like Portnoy and other traders. Frank, we had you on. If you go to, it's on youtube.com/Benzinga. But we had Frank on, and we bring on guys all the time who move the markets, who are smart, and who have a big following. And like today, we have a couple big followings, and it's our thing of live programming that we think should be two-dimensional, where it's us talking, people talking, it's the community. I'm reading the chat. People know how to irk me and do stuff, and it's kind of funny. And but Dave Portnoy, yeah, he was. It's a lot of guys like that have a lot of reach. And why do they have to go to just CNBC? Why doesn't Benzinga an outlet for them? And that's how we have been doing it. We do a lot of education on our YouTube channel. A lot of, because like Frank said, guys, there's a lot of new investors. And it's easy to go buy Sundial, SNDL. But do you really understand why you're buying Sundial? I would say probably not. And so there's still good fundamental investments out there. I recently bought a stock, Valentine. It's the symbol is BTN, B as in boy, T as in Tom, N as in Nancy. And I bought it because the valuation is very fair, and it's one I'll hold for a long time. But more importantly, in this day and age, we're so networked. Like, I didn't talk to Frank for a few years, but now I'm sure we'll talk all the time because we're so networked. A really smart person called about BTN. He put the financial model together, did the valuation. He buys it, I'm in it, and that's it. You trust your leverage, your social, connections, and that's pretty important.
I was just going to say, how important is that? Because people say, Frank, you do a free podcast for over 13 years now, but every week I interview someone that's brilliant, that's smarter than me, that I'm learning from. And as much as you cover so many different ideas and I cover different, we can't cover everything, right? And from my network, the ideas that I get from people that I trust, and not all of them are right, but they have great track records. I explain the importance of that to a network, and how could somebody young, what was the easiest way for you to build up your network? For me, I talked to everybody. I made myself available. I did things for people without asking for anything in return. I mean, how do you build up your network? I get that question the most, and you have one of the biggest out there.
So just what your last part that you said is you gave more than you received. It's another way to say it. Give, then receive. Give, and then maybe receive it. Don't expect it. So what I do is I have like a tickler file that it's in my phone, and every 3 months I want to make sure I reach out to my tickler file. But that's less so a science. It's more awareness. So if I see something that I don't know, I'm a small investor in a company called StockX. If I see something that'll affect the shoe market and resell, I send it to the CEOs and founders of StockX, and they love it. And they may have seen it, but it's me thinking of them. So then when they think of Jason Raznick, which I'm saying myself in the third person, just so you understand why I'm saying it, when they think of me, they're like, oh, that guy sends us helpful stuff from time to time. There's no hey, that guy's out. When he reaches out, he's always asking for a favor. I mean, you don't want that. People will reach out to me that I haven't talked to in 6 years and say, hey, let's catch up. What's going on? So I know at that time, yes, we're going to have a conversation, but I know there's going to be an ask. I know they're going to want something. I really try to give, and then receive. I'm friends with, and I'm dropping names now, but like I'm friends with, like, many basketball players, many like celebrity type people. If I called them every time and said, hey, can you do this or can you do that? They're not going to answer my calls. Like, they're not. So I really try to give, and then receive. And it's to the point now that, like, I know if I call and ask for something, I know for certain they're going to do it. Like,
Yeah.
And that's crazy to me. Like, I know that, I think of it like a credit and debit. And I don't necessarily in that sense, but what most people do is they ask for favors right away. I mean, do you know how many people, Frank, have hit me up on Dave Portnoy? I'm going to say over under 20 people asking me to connect them to Dave. I'm not kidding. And David, by the way, is not going to go do stuff for me. It's not like that. And so, and I'm not asking for Dave for any favors, because Dave is the Howard Stern of this day and age. And, you don't just go, well, why would he want to just do favors for me? So then people are asking me for favors from him. And it's just like, and that's the opposite of give, receive, give, and maybe receive. And you don't necessarily have to receive, but if one thing I would say is it's really easy to be angry and mean and upset, or it's really easy to be nice, funny, and chill. It's just a decision in your head. It's a decision thing. It's just a decision in your head. So my thing is, I want to give and be as nice to people as I possibly can. I'm sure there's a couple people that maybe I've rubbed the wrong way, and I would love to make up for that. But the biggest thing I think we all need to do better in this world is seek to understand, because you never know where someone's coming from that day, and chill out. And I think good things come from that.
Yeah, I mean, chill out's a very good thing, right? Especially with everything political, everybody got crazy. Let me switch this around now. I'm talking about your network, but I see that through your site, and even I'll bring it up here when you're looking at a lot of these videos. There's one thing that's in common, which I see with all of them, is young kids. And I don't mean to say kids like disrespect. I'm saying it seems like in their 20s, early 30s. How important is that to you to surround yourself with that kind of, does that keep you young? Because when I see these guys talking, they don't even feel like they have a job. They love this. They're passionate about it. For me, I have young people around me, a young analyst as well. It does keep me young. And just to see these, how important is that? Because I know that your site, especially on the video end, is filled with a lot of young, very, very smart and talented people.
So, Frank, what I'm finding, I don't know if you find this at Curzio Research or not, but what I'm finding is younger people like to experiment more and try things. So with our video, Frank, I have to be honest, there was no real strategy and tactics. What happened was the GameStop thing, and I may be jumping, but I'm sorry. Is it okay? Hopefully it's okay.
No, go to GameStop. Yeah, absolutely. Okay,
so GameStop, people don't really know this, but we were the room where it happened. The Wall Street bettors were out there, but we had Andrew left from Citron Research on 3 Thursdays ago. He couldn't get on his Twitter feed. He came live on our show. We had 800 listeners at the time. He shows up within 10 minutes. 15,000 Wall Street bettors were there and took over the show. And just like it was insane. It went stock went from $40 to $75 over 2 days. But we were the room where it all started, like 100%. It's not even a debatable fact. Okay, yeah, it was crazy. But then the next day we went for 11 hours straight. And so I'm like, wait, maybe we should do more of this. And we need more show hosts. Like I will hire anyone. Not anyone, but we need more show hosts. What I find is the younger crowd is more willing to do some experiments. I'm all about doing experiments and seeing what happens. I think the older crowd also has a lot of intelligence and things to impart. The younger crowd is easier to get to do experiments. This entrepreneur, Dan Gilbert, he's the owner of the Cavaliers and Quicken Loans, Rocket Mortgage.
He was the trainer, wasn't he? Did he start out as trainer or something before owning that team, I think? Yeah, but go ahead.
Trainer? No, maybe another one. No, Dan was Cavaliers. I mean, Quicken Loans. He was slinging mortgages out of his trunk, and now he's like, I think he's the 15th richest in America, or like 15th richest in the world, something like that. I don't know, whatever. But so he always said, "Money follows, it doesn't lead. Money follows, it doesn't lead." He's like, you build stuff, and then the money will follow. So like on the video stuff. I've reached out to some people. I'm like, hey, guys, I don't know if this will work. I have no idea. There's a good chance it won't work. Probably the odds say in history it won't work. But if you want to give it a try, let's go give it a try. The younger folks that I talk to are more willing to give stuff tries. Yes. Older folks sometimes I need to get 5,000 a week. I have this. I'm like, well, we don't have that. We don't know if it's the real thing.
Yeah.
So that is one of the differences. And by the way, I think it will be a real thing. I think it will be. So, but I don't have the money to go put 20,000 a month into one post right now.
Yeah, no, and I mean, even with the young people that we hire, one of the things I realize is that's where the innovation comes from, because they think about things differently when we're conditioned, right? There's so much influencing us that, they're going to do things and I'm like, what are you, crazy? And that's how you really disrupt things, right? You don't disrupt by doing what everybody else says. And that's kind of what you get used to as you get older. But the younger generation and just the social media and how we're expanding our presence there, things that I wouldn't even think of doing. It's pretty cool how smart. They're much smarter than me than I was their age. I can tell you that. It's incredible.
I hear you, but it's Frank. You have a lot more years, and so do I. And we've seen markets go up and down. Yeah. And what I'm afraid is that most people have not. They've just been in a bull market, and that's what I'm afraid of. Like, they're not used to this. But, what is that thing? What's it like? That's what I'm afraid of.
No, definitely afraid of it too. Definitely afraid, because it's not going to always be like this, and stocks going up like till right from 7 to 60 in 5 weeks or 6 weeks. It's usually not like that. Yeah.
It reminds me of CMGI and those stocks back in the day that went from the CMGI, and then there was another one. I can't think of the name of it right now, but that's what it reminds me of. And so there's going to be blowback, and it is what it is. And in the time, you don't know. Remember in March when the market like basically took a beating and it made sense to buy stocks? That's the same thing right now. Like, you got to be able to get in when people are fearful and sell when people are greedy. Like, that's the game,
No, absolutely, absolutely. And I love that you're moving around. Is it starting to rain over there? You getting a little wet?
It's starting to rain. Can you see?
Oh, I can see it. It's perfect. It's awesome. I think people are going to be happy that it's raining, so you can't jump in the pool when it's like, -5 in Dallas.
I have to move. I have to move. It is downpouring. It's downpouring. It just started raining like you have no idea. So we're back.
People love like just, two guys sitting down talking and just, nothing's formatted or anything like that. I'll send you a couple topics I want to touch on. I think that goes very, very well, even with your power hour and things like that. But let's get to some of the things that you were talking about now, like the sectors and everything, because we're seeing Bitcoin, 50,000. You're looking at just marijuana stocks really, really catching a bid. What are some of the things that maybe the investors on your website or your audience is, what are they interested in the most? Is it just those sectors? And maybe what's the next sector? Or even a better question is, are they worried at all that these things may be overheating like marijuana stocks or just even, targeting these stocks that have huge short ratios like we saw with the Reddit crowd?
Some people are cognizant of the market and going up, but most people are looking for the next trade and not looking at risk aversion. So I always own some long-term puts on the SPY. Those right now be down a ton, but I always like to have some hedges in. I like to have some hedges in just in place, long-term puts or whatever, or something. You can do a lot of different hedges, but that's one I like to have. But I would say silver is one of the sectors heating up. Another one, which I've been invested for 2.5 years, is lithium. Graphene, these are things that go into an electric vehicle. Graphene, lithium. I've owned LTHM for 2.5 years. It didn't move for a year and a half and then took off. But and so I'm seeing a lot of people looking for like the new metals in battery and the innovation on our site, like the what's going to be next. What's going to be next? There's a company FUV. It's a 3-wheeler vehicle, it's a fun utility vehicle. Partner with Stadium Monroe. So a lot of electric vehicle stuff. That's what I would say is probably the most red stuff. Now, cannabis is definitely big. Cannabis, there's definitely several companies like Akerna, which does a lot of the back end stuff. I don't own that one. The two that I own, maybe I do own a little Akerna, but I own Terracin and Curaleaf. I probably do own a little Akerna now that I'm thinking about it. But so it's a lot of like, what's going to be the next? What's next? Who got next? That's what they're trying to think of. Now Tesla is definitely one of the most widely owned stocks on our platform. By far, in terms of valuation wise, it's the largest. But they're trying to find the next Tesla, and it's our job to try to find the next Tesla. So one of the reasons Benzinga exists was, there's so many scams out there. I don't know if you remember, but like maybe 6 years ago, every single company was attaching crypto to their name, like these small caps, and they put crypto. Their valuation went up like 30%. So we try to find out what's real, what's not real. It's another thing.
Sounds familiar, right? With .com ever? How many companies change their put .com money into the name, right? And create a website right before the blow up. But let me ask you a question. How many? So you have access to so many ideas, so many stocks. How many do you have in your portfolio at one time? I mean, is it, I'm sure you have a trading portfolio. I have a lot as well. Is it, and again, you don't have to answer exactly how much or if that's too personal, but yeah.
No. I would show my holdings. I one thing is, if I just tell the truth and put it out there, it's a lot easier than having to double think stuff. And I know that's the same thing for everyone. So I probably go a little too personal, but so far it's been okay. But I probably own in my active trading account, I used to own like 15 stocks in it, guys. And this just shows you how extended the market is. I own like 40 stocks in it. So if you ask me every single stock what they do, I don't know. And that's very odd for me, Frank. I usually know. I don't usually treat them as just letters. But then I mean, like you see Sundial from 60 cents to $3, and people are telling me nonstop. So I bought it at $1 and I sold it at 180. Like I just like, all right, I'll buy these. I give. You guys are right. I'm wrong. So I own like 35, 40 stocks. I mean, if the market takes a beating today, yes, I'll be down a lot. But I own some really strong stocks that I like, and so that's just what I do. And so I own about 35, 40 stocks in my active trading.
Yeah, and I saw even David Portnoy on Investor Hour, one of those. I think it was one of the ones that I was on with you, where you said, hey, he texted me, this is a name that he likes. Look, and I forgot, it might have been like, it was an ammo or something. I forgot what it was. They sell ammo on it.
POWW. That was an ammo play. I mean, the market's crazy. Like right now, we're open right now. I own a stock KMPH. I bought it at $6.90. That's $10.92 today. I trimmed some, and this lady who gave it to me, Viv, she's like, don't sell any, Jason. So I sold a very small amount, and it's up a ton. Voyager Digital, it's a crypto play. Crypto, it's up $1. It's up $1. And that's the CEO of it is Steve Ehrlich. So now we go back to Benzinga days. Lightspeed was one of our first clients. He was the CEO of it. I met him. I maintain. I'm like, we're good friends. Upwork, it's a big stock I own. I own a stock right now that I don't know why I own it, but everyone kept telling me to buy it, so I bought it. AMYZF, it's recycled for battery materials. AMYZF, it's up 30% today. So, and I gave BTN at 250 last week. It's at 305 today. So that's just,
the power of your network. The power of your network. Yeah, it really is incredible.
I bought EXPI, EXP Realty, up 34% in this. GAN, GAN. I mean, it's I don't know. I haven't seen markets like this. And then I do margin from time to time, and then I lower the margin. I lower it quickly. I lower it faster than I raise it. That's for sure. When I feel stuff's extended, I'll go back into it. But this KMPH I bought 3 weeks ago, it's up 60%. Is that overextended? I don't know. All I know is I did sell some shares. I guess she was right. I should have never sold any, but I'm just thinking she's wrong. She's wrong. She just, and she's been right. This girl, Viv, and she's been right on all this stuff. So we had GMBL, Frank, on our small cap show. We had GMBL. It's an online gaming platform, entertainment, something. GMBL, the stock was at $4 and was on our small cap conference. Today it's at $16.04, up another 7%.
Wow. And Voyager is one that we had in our portfolio under $1. And I mean, just the crypto stocks in general, if it's Mara or Silvergate's another one that people aren't familiar with. And that one is through the roof now, $140, $50, wherever it is. Probably higher today with Bitcoin touching 50,000. But
what about BNGO? BNGO is a Kathy Wood play, but this guy, Tom Nash, gave it to me at $570. It's at 14 today. So, but yeah, let's say Bitcoin hit 50,000 today. Is that what you're saying?
Yeah, I mean, you're seeing a lot of these, pure play Bitcoin, the Voyagers, the Silver Lakes, the stocks that are related to those, right? The Hive Technologies. I mean, people don't realize that those are the pure plays instead of buying the other ones that aren't pure plays. Those things have really, really taken off. Especially if you think it could be 100,000, which a lot of people do, and more institutions are coming in, MasterCard and B of A, Bank Mellon. Yep. Anyway, but I wanted to end with this, right? Because I know how you're a busy man. You're doing this. Thank you so much for doing this. I know you're away.
Thanks for having me. Much appreciated.
why don't you take us through your site, because I know people are going to definitely click on it. You're one of the people that I love even promoting, because I know you do the right thing for the small investor, and that's what we're about as well. It's bringing Wall Street to Main Street, leveling that playing field, and giving them the same thing that we have access to, right, all of our lives. And it's really, really worked out for us. It's worked out for you. But take us through some of the things here, because you also have like a Benzinga Pro here, right?
Yep. Yeah. So if you go to premium on that orange link there.
Okay.
So on the orange link, it's on the right side, top right. Yep. So there's like the different newsletters we have, but Benzinga Pro is probably our flagship property. There's tons of investors, maybe 10,000 that pay, maybe $100 a month or something like that. And it's real-time news data. There's a 30-person newsroom. There's scanners. There's signals. It's the top link on the top, and it has everything in there. Frank will get you an account, but it's like it has 52-week high breakouts, option alerts, unusual volume, signals, scanner, chat rooms, the news desk. Then it has press releases where you can divide by sector. Has your watch list. It has everything that you would think in a Bloomberg. It's just a naked version of a Bloomberg. It's not as intense. It's a little easier. It's like Bloomberg meets Apple. That's the idea for Benzinga Pro. And there's a lot of these different things we have. And so we're always hiring right now. If we find driven people that want to impact the outcome and democratize finance and change how we invest for the future, then we're a place for you. And you can apply at cooljobs@benzinga.com, cooljobs@benzinga.com. And I'm on Twitter at Jason Raznick. But then if you're on Benzinga, we have small cap sections. We have ideas. Chris Kaji is one of the most read writers, KTJE. He's really good at SPACs. SPACs is this guy. He's just the best. He has a show called The SPAC Attack. He is the guy when it comes to SPACs. Chris Kaji. He is the guy. And
that's great.
He is. I'm just telling you, he's been amazing. Like I don't know anyone better. And so Benzinga has trade ideas, has news, has everything. You can look up a symbol and see. And we cover everything. We have 100 people, and we're trying to change the way information is delivered. And it's hard. It's not easy. What we're doing is not easy. I mean, we get ripped on because we didn't cover this stock, or we're trying to pump this. No, we're just trying to get the news out there. I don't care if I own a stock that we cover. I don't want to be responsible for moving anything I just want to inform and let people decide, that's it. And if we can do a good job with that, then I think we'd solve problems for people. So, and that's all we try to do.
And last question here too. You guys do a great job where you have like a pre-market prep video. You have the Power Hour, which I've been on, and you host with other people have come on and given ideas, but also the free webinars. I think you do those once a month where you have like people. I don't know where you get the people from, if they're from Benzinga or if you have guests come in and a lot of that's for free. But I'm sure that's doing great for you too, those webinars, because it seems like your staff has given me passwords to log in, and when I've logged in, they were very, very good. Actually, they were really cool. It was very educational.
We think if we can educate the future of investors, America, it's a good thing for everyone. And so, yes, we do those free webinars, and there's 10 to 20,000 people that attend each one. The Power Hour you were at, pre-market prep is every day for the last 5 years at 8 to 9 a.m. when the market's open. Every day. It's I think the best way to get your day started. The webinars, you can go to, on Benzinga.com, there's a place to sign up for newsletters in the top right corner, and you'll get in the funnel for those webinars. But we are not just trying to sell you. Yes, we want to get some subscriptions, but if we can educate the future investors, we think it's a good thing for everyone.
No, this is really great stuff. So I guess we'll leave it there. I'm going to say,
the page. Yeah, go back to Benzinga.com. Now type in pre-market. This is a new page we just launched. Benzinga.com/pre-market. Watch this. I know Benzinga has to be easier to navigate. We will get there. We have a new site rolling out. Okay, there it is. So if you're ever in the morning, you want to see everything that's moving. We have a nice little graph. You can expand it. Then if you go down, it's all pre-market news and related headlines. Then there's the biggest losers. Here's all the analyst ratings today. This is the way I start my day every day.
No, this is great. This is really great at the beginning of the day. Absolutely. So we're going to end on this now. How long are you in Florida for? Hopefully for a couple of weeks, and hopefully you jump in the pool pretty soon with your family. How long are you there for, buddy?
I'm a flag football coach. I got to be back on Saturday because of game Sunday. And so if there's no flag football, I would be here 2 weeks. But flag football, I'm a first time coaching. I love it, passionate about it. And so, yeah, I'm here till Saturday.
Nah, it's great stuff. Well, Jason, listen, thank you so much for doing this. I had no idea you were on vacation until you came on. I would have told you not on vacation, but even out in Florida. I really appreciate that, man. Really.
Dude, Frank, you're the man. You're a Curzio. You've been always a man of integrity, man who gets it, just passionate about what you do. They don't make them much better than you, Frank. And so anytime, any place, anywhere. So thank you for having me on. If you want to follow me on Twitter, guys, I'm at Jason Raznick, Raznick. And Frank Curzio, if you don't follow him, better be following Frank because Frank's the man.
Thanks, man. I appreciate it. And hopefully join us again soon. Take care, buddy.
Thank you. Yep. You too.
So great stuff from Jason. It was so funny because he was debating whether he was going to do the interview outside or inside. Then it started raining. But it's funny because he's kind of like me and a lot of other people where he'll get he's in a t-shirt and you'll see like his gym shorts. Because right now I'm wearing gym shorts because I work out in the morning and then we do this podcast. And I'm usually wearing gym shorts through the office. I'll change my shirt. I remember Dan Fitzpatrick, who used to interview a lot. He used to go on CNBC. He used to bring his dog with him. His dog, he used to wear shorts and his dog at his feet and stuff. But just to see that and he just gets up and walks away. It's just cool because it's unscripted. It's awesome. And I'm a big fan. I'm a big fan of Jason's. Lots of great ideas that he provided. One of those is going to show up in our Dollar Stock Club portfolio, where we take one stock from our guest each week and write it up. Sometimes we'll have a guest that's not an analyst or give us a stock, but most weeks, I'd say about 45 weeks, 45 picks a year you get. If you're new to this podcast, we're getting lots of new people come in. You don't know Curzio Research. You should be skeptical from us from the start and do your homework on us. But one way to find out more about us is not just by listening to podcasts, but subscribe to Dollar Stock Club. It's $4 a month, right? So you're going to get lots of trading ideas from brilliant people. We talked about the performance has been, very, very good. And these guys are going to get you in things that maybe I'm not getting into, right? So, which is really cool. I mean, there's marijuana ETF, there's an energy ETF, and I didn't agree with energy a few months ago, and look where that went. So, we've done well on a lot of other things, but it really opens the door to just so many ideas, and you get to see really our research because we create a one-page report, give you a buy up to price, a stop on it, and it's like a trading portfolio, but it gives you a good idea, and then you go, people like to listen to the podcast and try to jump the gun and think what stock they're going to be able to get in. But it's just really, really cool. Excuse me. It's just really, really cool. And that offer is available on our website, curzioresearch.com. But again, it's $4 a month. We want to provide something where, a starter newsletter where you see our stuff in hopes that, hey, these guys, you say Curzio Research, these guys got great analysts and our other products are more expensive. That's how we build our business. But I always believe in showing you first and just telling you how great everything is and you should subscribe to a very expensive product. No. Build that, do your research, learn, like I said before, early in the intro, question everything. But really love Jason coming on and definitely take a look at some of those stocks because I started researching them. Again, high growth industries, names that he's getting. What I was the most interested in is the GameStop thing started on his platform, which I was surprised on. I didn't know it actually started in his platform with Citron Research that he explained where, all these Wall Street bet guys got on and he just blew up the platform. And I remember him canceling that because he's going to talk about why he should short GameStop and went to 4 to 70. That all started there. And then, you see the powerful of the network and the people that are coming on. But and I really like what they're doing. And those are really good guys over there. So thank you so much, Jason, for coming on. Okay, this podcast is about you, not about me. Let me know what you thought. Frank, CurzioResearch.com. That's Frank at CurzioResearch.com. Now, lots going on in the markets. Let's bring everybody. Daniel Creech, Senior Research Analyst at Curzio Research. Daniel, what's going on, buddy? How's everything?
Yeah, it's good. Shout out to everybody in the crazy winter's way from Texas to the Midwest to everywhere. That's nuts. Hey, you ever been to Mardi Gras? That kicks off today.
No.
Did you see the front page of the Wall Street Journal?
No, I've been there, I think, a couple weeks before or something, and it was great. But no, I know that they're basically opening it up, though, I saw, right?
Well, it was just wild because the Wall Street Journal had a cool picture because it just did a side-by-side, and last year's, it was crowded as hell, which if you would ask me that, I wouldn't have guessed. I would have assumed it was either cut way back or canceled, but it wasn't.
Nothing happened. Like, this is February. I mean, the market didn't start crashing. People didn't realize, like,
well, that's true.
Was spreading.
That's true, yeah.
It's
I guess it is.
February.
Time flies.
So, like, you're going to see the comps in late March, then April when everything starts locking down.
That's true. I guess everything didn't start shutting down right away.
Yep.
But then this year they did the same side-by-side picture, and of course it's just empty as can be. So pretty wild. But yeah, I've never been either. I've always heard good stories, but looks like I missed my chance. So.
Well, no, I think things are going to start opening up now. I mean, I mentioned earlier, COVID cases are down tremendously. Hospitalization rates are down tremendously. Hopefully we start opening everything up. Vaccinations are taking place. It's it's pretty incredible to see where we are right now. And I think people feel a lot more comfortable. And again, we still have to protect the people if they didn't, older people who didn't get the vaccine and stuff. But you're going to see lots of things open up in the next 3, 4, 5 months. And I'm telling you, it's going to result, like I talk to you today, I say this all the time, it's going to result in an absolute explosion in demand, especially for travel, people getting away. They're dying to get away. Casinos going to be open, fully open. It's going to get really, really, really crazy with the amount of money they're just handing people and they're just dying to spend it right now. It's going to get nuts when this opens up, and it's going to be a lot sooner than I think what people believe. Yeah,
the scary thing is that everybody's expecting this blow up top or blow off top, and it's hard to argue that. We were joking about Bank of America report about the only reason to be bearish is to be bearish because there is no reason. And that's interesting because you know what's coming. I mean, if you dumb it down to my level, you basically, are throwing so much more water through money stimulus into a pot, it's got to overflow, and it's just going to be amazing. So it will be interesting to see where the money goes. But what's going to counter that is rising prices with food and energy that's not counted in the inflation targets that the government does, that you talk about.
Nothing's counted inflation. Nothing. Yeah, we have zero inflation. And this is all based on like the Reagan era, how he changed, which I really learned recently, did some research and talked to a few people I know, how he changed the system when it comes to inflation, where he just changed the way we look at it. He changed the formula. And now it's, hey, the CPI is good. We're under 2%, and that could be 3.5%. It's not going to matter. They're still going to be pedal to the metal, low interest rates. But it's just funny how everything that we pay for across the board is higher than what we paid for probably even yesterday. And look back for years, whether it's food, tuition, every electricity, it's absolutely insane. But it doesn't matter from an investment point of view because what the Fed looks at is the CPI, and the CPI is showing that there's no inflation or very little inflation, so therefore they're going to keep rates low, and you're going to see a lot more stimulus dollars come out. That's how you have to invest. So I understand Bank of America's point saying, it's hard to be bearish. It is. It is hard to be bearish, but sometimes, again, if you're not following the status quo we talked about earlier, you want to be careful here and just protect yourself a little bit. You might be wrong and you're not going to pick the absolute top, but at least protect yourself if you're buying puts or something. And because if you're right in the put, it's going to result in, 5x, 10x returns. And if you're not, maybe it's 2% of your portfolio or whatever, but it's definitely worth to start hedging yourself and being smart here because, look where we are with Bitcoin, right, Daniel?
Yeah, Bitcoin. Yeah, it's over 50. Is it still over 50? I don't know what it currently is. Hell, it could be 60 by now.
It's 51,000 right now, and I'm going to show you. Yeah, so I'm bringing up the chart right now. So market cap of $951 billion, but this is the chart right. Look at this chart. This is just a year chart if you're looking at it, where it was under 10,000 a year ago, and yeah, it's just an incredible move, like just unbelievable. It just keeps going higher and higher. Yes, 51,000 now. But you could argue, Daniel, that, it's not done going up with all the institutions buying. And then you talked about, MicroStrategy is a company that you follow very, very closely. And what did they just announce? This is like the other day, like yesterday, I think.
Yeah, last couple of days, they've had to up their offering. So it fascinates me on the market reaction. So you kind of think about, you got to be more careful. How do you do that? What do you pay attention to? MicroStrategy announced that they were raising convertible debt that pays 0%. So they're going to take in money today. Those are going to convert to shares or get paid back later. And they're buying Bitcoin with it. They were going to buy 600 million worth. They upped it to 900 million. And they already have over 2 billion in it. So they are, you got to give that guy credit for leading. He's putting his money where his mouth, or his company's money where all their vision is. And it's wild. But when they announced that, their stock went down. And that's kind of an interesting tell because lately, everybody that announces or puts Bitcoin or blockchain in their name, or you see a lot of mining companies coming out, crypto mining, people are switching their business models. I'm not blaming them. I'm not saying good or bad, but when the stock starts to not react like it has been, that's just another data point to pay attention to and just understand this shit's volatile. So be prepared.
It is pretty crazy. I'm trying to bring up a chart here if they allow me to.
MicroStrategy from February 9th has gone from over 1,200 to under 900 today.
So was it over 1,200?
Mm-hmm. Now, that could have been in an intraday price, but yeah, I'm looking on it on Seeking Alpha, so.
Yeah, so, I'm trying to punch that up here and see if I can give you a chart because if you're looking at MicroStrategy and where it was, I mean, holy cow. I mean, this is a stock that's just incredible. So it is below 900 now, right? And it did go a lot higher, which is interesting. But, I'm bringing up that chart right now. Here you go. You can take a look at it. Again, for our Curzio Research YouTube page, we like to show a lot of this stuff, or you could be listening to iTunes, but we have all this for free with our interviews. And, you can see Jason's beautiful face and my ugly face and Daniel's beautiful face on YouTube. But really quick, you're looking at this chart of where it went, and just 3 months ago, you're looking at a stock that 3 months ago, MicroStrategy, like a little bit before December, was $200. It went to close to $1,300. It did intraday high of $1,315. Now it pulled back, but I'm not even too sure, Daniel, if that's an indication of, hey, this isn't working anymore, or if it's like, okay, I think that 5x premium is built in, and even though over that period where you saw the Bitcoin you bought go up in value and maybe double, it's still in the scheme of things, in terms of your market cap and everything, their market cap is now $8 billion. So where to go from, it gained $6 billion in market cap and made $1 billion, probably maybe a little bit more than that, maybe $2 billion. But the market cap increased 3x by the amount of money they made in Bitcoin, basically. And I'm not doing perfect math there, but you guys get the point. So maybe it's just like, all right, enough, because where's this thing going to go? Is it going to go to 10,000 or 5, whatever, but. It is interesting to see. It did pull back significantly. 1,300 to under 900 is significant, and let's see if that continues, right? Because we've seen a lot of stocks continue to do well as Bitcoin goes higher. Yeah,
and it's great to see Bitcoin. It'll be interesting to see how it trades going forward. Over the next few months. In 2017, when it ran up to 20,000, hell, it went all the way to under 5 or 4, I think, even for a little bit. I don't think the odds of that are very good at all, but. Would it surprise me to see it go down 50% from here and then hang out at 25 or 30,000? I don't think that's out of the question either. That'll be the interesting thing going forward. The funner thing for us personally and then subscribers is going to be the follow through of the amount of money flowing in to altcoins right now. We were talking the other day, Binance.
Holy cow.
So not all cryptocurrencies are good, not all are bad, just like stocks, just like every other profession. But what's going to be interesting is that you're starting to see this huge bull market in altcoins, right? These stocks are moving 100% in the last 2 weeks.
You updated the portfolio.
Not stocks, but coins.
You updated this portfolio, our crypto portfolio. And guys,
I told you, I was like, oh, I did it last week. And you're like, no, you haven't done it since the first. I was like, oh, well, I thought I did it last week.
Yeah. So, and you're like, I was like, just update it really quick because I want to see everything. We have, and this really happens in my 25 years of investing. You had a couple of 10 baggers, 20 baggers, everyone will highlight their biggest winners. We have 14 positions. 3 of them are 10x plus. One of them is 16x. Another one's 13x. 10 of those positions are up over 100%. With out of those 10, 5 are up between 300 and 700%. The gains in this stuff. Seriously, if you are a risk averse investor and you're looking at things and saying, I can get into these crazy energy companies or electric vehicles, whatever, all these companies that you can get into, and I understand it's nothing compared to what we're seeing in crypto, which is crazy, but there are some good names which we'll be able to navigate, like the Litecoins we recommended earlier, Ethereum we recommended earlier, we're up tremendously on it. Holy cow, just try to get familiar with it, because also we have security tokens coming down too, and I'm just glad that our subscribers, that never happens, gains like that. I'm not going to lie to you and say, hey, I'm great. You need that crazy bull market, and I just love to see that, hey, you know what, we did the right thing. We only put a small amount of cash to work in 2018. So we said, listen, be careful. It's going to get a lot worse. And then really invested in some of the best ones that got crushed. People have sent me pictures, which is the greatest compliment you could ever get of he's in Cabo right now and saying this is because of Voyager Digital, which is up, tremendously, recommended at 84 cents, and it's whatever, 15, 16. And that's why you listen to people, right? That's what you want to do.
Yeah,
to me, that's what it's all about, man. It really is.
Yeah, absolutely. I just think it's going to be a great ride. It's just another great story of capitalism, but it's going to be neat to see these coins do well and blow up, and then that money and that same tailwind and enthusiasm is going to shift to the security token market, because people are going to realize eventually, as the products are built out, it's easier to buy and sell, it's easier to trade. They're going to realize, hey, these are legit companies, they're trading at good valuations, and anybody can get in, and everybody's going to be flush with cash for a little bit, and that's going to rotate. So that'll be really good. So, that's forward looking, but that's an exciting adrenaline to have.
And you're looking at a lot of these, like look at Square, look at Tesla buying Bitcoin. Of course, you have MicroStrategy. You talk about Mass Mutual. You see more and more companies. And 6,000 people signed up to the MicroStrategy conference. That was CEOs of companies looking to buy this. So maybe they're not Fortune 500 companies, but companies that have maybe a couple $100,000 on the balance sheet, maybe a couple $1 million, that they may look to buy it. But what do you think is going to happen if this thing comes down? I mean, these guys are committed to this. They really believe it's a store of value. So they're going to add more as it goes lower. Maybe you see a 15, 20% decline, but these guys are going to come right in. You're going to see MicroStrategy, which, by the way, I find it interesting because people like, it's the end now when you see a company raising debt to buy Bitcoin, because we heard the same thing, Daniel, when all these companies, the past 4 years, when interest rates, super low, were borrowing money to buy back their stock. And everyone was all over them and saying this is going to, and turned out to be an amazing, amazing, amazing decision.
Yeah.
Right? Because they borrowed at super cheap rates. They bought back their stock, and almost every stock you're looking at right now at the markets, they're at all-time highs. So I don't know if that's saying, that's a sign of a top or not, but probably not.
Yeah, I mean, well, like I said, when you consider the environment we're in with interest rates and stuff, it's silly not to take advantage and use money as best you can. And just like Apple doing that, you take out debt to buy back your stock at next to nothing interest rates. You also pay back dividends. You carry that forward, write it all off. It's brilliant. So no, I don't think that's the top. It'll probably get ahead of itself like everything else does, and you'll see some people get burned on it, and probably some management changes here and there at different elections of boards, but that'll be it.
Now, I want to talk about something that's very, very important, guys, because people still don't understand this, especially young investors and investors, new people to the market. If you imagine over $100 million in assets, I believe it's $100 million, you have to report your holdings every quarter. And not your shorts, but if you have options, you do. And that's when Melvin Capital got in trouble, because everyone knew they would completely short and highly leverage, and they were easy target for the short squeeze. But these companies, it's called a 13F, and they report, all the companies that the new positions, the ones they're still holding, and the ones that they decreased, and the ones that they got rid of. And it's a great list. And remember, this is going on the past quarter. And if you're looking at Renaissance, don't even bother. And some of these high frequency trading firms, because all those stocks, they go in and out of stocks within minutes, right? It's all like program trading and stuff. But you have these value investors, long-term investors, very smart people. And they'll talk about a lot of these stocks that they own. And let's talk about that, because it comes out just after earnings. The earnings season just ended. And then all these companies have to report. Again, it's regulation requires it. And you can get a lot of ideas and look at things where, maybe it's a new position this quarter, and then, you keep an eye on it. And then next quarter, it came down a little bit and they're adding to it. Now you could say, wow, these guys are committed. They're really in for the long term. And sometimes you could buy it, 15, 20% cheaper than what these managers are getting in. And you kind of know they're in the long term because they're adding it, but there's different ways to play it. And you've been looking at that. I didn't get a chance to look at it too much, but I'm going to bring it up when you talk. There's different sites that you could use. I'm going to use a paid site when I show you this, but it's very interesting, right? I mean, you found a couple of good things.
Yeah, it's just I was curious. I've been stupidly bullish on oil, and I say stupidly because we haven't recommended any of it. We've just been talking about it, watching it go up. So that's been frustrating. So I was looking to see who, what these hedge funds were looking for, and anybody was taking some oil positions, and they have. And like you were saying, it's cool because you can see Whale Wisdom is a free site that people can go to, and they track a lot of good 13F information, 13F filings. The big one, Buffett got into oil. He bought Chevron, so that was a new position. And these come out 45 days later after the quarter ends. So they're all reporting stuff they had as of December. So like Frank said, it could change a little bit. But David Tepper, who I always like paying attention to, gazillionaire, awesome hedge fund manager, he took an 8 million share position in Oxy. And that's interesting because Carl Icahn has been in Oxy for how long? A
long time. I don't know if he sold his position.
No, he maintained it.
But it came back.
He's maintained it. And, that thing is coming back. I'm sure a lot of that, or some of that's probably through debt and different things he has. But yeah, Buffett, big deal was, hey, he trimmed a little bit of Apple. He bought some oil. He bought Verizon. The oil stocks are just interesting. And then guess what? Disney, Microsoft, and Facebook were either added to or new positions were maintained a lot in these hedge funds, which really isn't surprising. But somebody, and I wrote it down, I don't have it in front of me, I'm sorry, but somebody bought Square. And that shocked me because it's had even if you bought it any time last quarter, it's been on such amazing move. So that was good to see. So yeah, you always want to look for what they're selling, what they're doing. And but it's interesting to see what the rich guys are thinking about.
Yeah, and let me bring it up here because I'm looking again. This Bill Ackman, you can see all his positions, and this is briefing.com. I don't get paid a dime from these guys. I wouldn't tell you to use a site though, because it used to be like $300-$400, and now they're making it more institutional. Like it's like $1,000 now, which is insane. But it is a great site. And you see, George Soros I'm highlighting here, all the picks. And again, one of the greatest investors. I don't care what you think politically about George Soros, but it's just unbelievable investor, incredibly smart. Bill Ackman. But how would I look at this? Like, here's third point, Dan Loeb. And again, I haven't looked at this yet because it's been crazy. I'm going to just, probably look at this all day today and tomorrow just to see if I can find ideas. What I noticed about third point, Dan Loeb, one of the great investors, is he's getting out of a lot of technology stocks. Alibaba, JD, a lot of Chinese stocks, Salesforce. He did decrease his position in Disney and Adobe. He decreased his position, and now it looks like he's going to a couple of he bought Nike, but Intel. He started a position in Intel, which I think is interesting, but it seems like he's going a little bit more value, a little bit more safer here in terms of, he maintained his position in Facebook. He still has, technology, but just things like that, like David Einhorn, what is he buying? Sometimes you'll see small companies on here too that just make sense, but these are all the symbols, all the names, what they're doing. They're decreasing their position, they're closing their position, they're maintaining their positions, or they're increasing. But what gets the most attention is the new positions and the one where they're closing. So because that means they're completely out of them. You see Value Act, those guys are huge as well. Some of the things, the big players in KKR, one of the large shareholders, now they're starting to trim Morgan Stanley. What I'm realizing is there's not a lot of companies I'm seeing adding or having financial exposure, which I think is great. To me, it tells me that's a cyclical industry. It's going to go up as the economy reopens, right? They do very, very well. And you're not seeing a lot of companies going into, these names at all, which means that once they do, like you see with a Disney, when everyone starts going, that's really pushing the price up. These guys are like massive, massive people. Their funds are huge. David Tepper is probably my favorite guy of all. I admire him. Again, that Oxy position. Is that the one you talked about, David Tepper?
Yeah, because he bought it. That was a new position for him. Carl Icahn owns over 88 million shares of Oxy still.
Man, this guy is just ahead of everything. And, it's unbelievable. It really is.
Seth Klarman, how do you say his Ballpost Group or whatever?
Ballpost Group, yeah.
He took an 18 million share position in Intel. So wonder if him and Loeb are chatting.
Yeah, but I did notice here Berkshire. They highlight here Berkshire Hathaway, guys. So pay attention. This is important. You get lots of ideas from this, guys. I mean, if I could educate you again, you can see this on our Curzio Research YouTube page. We're going over it. I'm explaining in detail if you listen to iTunes. But Berkshire is they're out of gold, GOLD, right? That was so big. Like every single, because of the resource guys, Buffett's in it. And even though it's not Buffett picking these stocks anymore, it's portfolio managers, but they're out of it. They're out of that, and I don't know if it's a good measure anyway, because these guys got out of the airlines at the absolute bottom, and I think they're incredible buys right now, and they're up easily doubled, almost triple from their lows. But just going through this, Starboard Value, Jeffrey Smith, very, very great investor, and it's a great firm. Just these guys have amazing returns, but look at all these stock picks that you can go through. Tiger Global as well. Just buying Dash. That's interesting. New position in Dash, really, at this valuation? That's interesting. So this allows me to really look at this and find new ideas, which is awesome. And you'll see a lot of those ideas show up in the newsletter. Now, remember, these are things that they purchased. They could have purchased 3 months ago, 3.5 months ago. They could be out of these positions right now, actually. They could have sold them last week, but they have to report them as of like 2 weeks ago, I think, whatever it is. But they could add, they could have more positions in it. They could have, more shares or build up those positions. But you want to look at it and not just say, hey, Carl Icahn just bought, whatever. He's maintained his position in Oxy, or he sold LNG, the position in LNG, Cheniere Energy. You want to look at it and say, okay, what is it? What is he doing? And a lot of times, are they adding to their positions quarter after quarter? Are they building it up? Like, the Buffetts, the Carl Icahns, they like to build up their positions. Some of them take a full position right away. And a lot of times you'll see a bad quarter reported and it'll come down 10, 15%. Now you're getting it 15% lower than Carl Icahn, who's buying this name, and he's in it long term, because he's usually in long term for, like, he still has Xerox, I see, he still has Herbalife, some shares. I know he maintained the rest of the position in Herbalife. Remember that with Ackman, how crazy that was. But all these guys, Bridgewater, again, don't pay attention to Bridgewater. These guys are out of these positions immediately. it's just really, really cool. And I think it's something where you could find lots and lots and lots of really cool ideas of the best investors. And it's not that difficult to find. You can just Google it.
No, like I said, Whale Wisdom is a great free site. You can
Yep.
get a lot of good information on that. They rank different hedge funds and different family offices and things. So yeah, if you're not looking at them, you ought to be as an investor, in my opinion. And you can get a lot of good stuff. So you ought to take advantage of that and check out what those guys are doing.
Yes, and also check out what Elon Musk is doing, because when he said buy Dogecoin, it's up tremendously. And now it's SpaceX, valued at $74 billion. So this is how they value companies, guys. They value the companies based on the investment round, how much people are coming in. So once you do an investment round, that's how you value the company. That's, the soonest you can value a private company, what it's based on. So, the latest raise values at 60% higher compared with the previous round in August, which was $46 billion. So now it's $74 billion. I mean, look, hey, maybe this guy just finds a way where, guys like you and me are going to space and stuff like that. But just the value, $74 billion for a valuation for a company like this it just shows you the power of Elon Musk and how many people believe in him. But that is absolutely incredible. People in that valuation in this world. I mean, I don't know, Daniel, it's pretty crazy times, right?
Yeah, that guy, I mean, everything he touches is gold right now. So good for him.
Yeah, I know.
Drives me nuts, but good for him.
So look, we'll leave it there. There's always, a lot going on, and I love having you come in, Daniel, and talk about all this stuff. It's really cool. And again, we break down the markets all the time. We're talking in our office and things like that. And we'll post, videos, and I'll do live videos as well on Curzio Research YouTube page, which you guys could see. And Daniel's going to be doing a lot more video too by himself, which is awesome. Looking forward to that. But Daniel, thanks so much for coming on and discussing. And again, there's always lots of things that we're talking about that we're going to bring to you and ideas and as much as we can try to make you money. So Daniel, thanks so much for coming on, buddy.
Absolutely. Have a great week.
All right, guys. So that's it for me. Really great podcast, great guests, lots and lots of ideas. But again, I always like your feedback. I do this for you. I don't do it for me. It's a free podcast. Just let me know. Frank@CurzioResearch.com. That's Frank@CurzioResearch.com. I know I say it a million times, but our YouTube page is getting a lot of traction because that's where people like to watch these interviews and just see a lot of the sites that I'm bringing up and helping you and teaching and stuff like that of the things that I use. And just, it's really cool just to see the feedback and we're starting to really get some traction there, which is awesome. And yeah, if you want to take advantage of Dollar Stock Club, again, it's $4 a month, guys. It's our cheapest product that you pay for, and it'll give you a good idea. It'll give you lots and lots of ideas, but it'll give you a good idea of our research too, of what goes behind these companies, and what I'm talking about. Because some of those ideas that we get from our guests may not come from the interview, because I talk before and after, and we discuss ideas then. And sometimes I'll throw that in there and say, hey, we talked about this and he likes this company, this person likes that company. And you'll see it show up in a newsletter. It's every week, and it's cool trading newsletters. So if you're interested in that, just go to our website, CurzioResearch.com. If not, no worries. Just keep listening to the podcast and and enjoy. So guys, that's it for me. Thank you. Thank you so much for listening. I really appreciate all the support. And I'll see you guys in 7 days. Take care.